This is the Southside School of Financial Freedom Watch List and Market Report for the week ending March 20th, 2021. Our question this week is, what is the FOMC? The answer will be provided later in the video. This week, the market ended down. The Dow Jones Industrial Average decreased minus 0.71% on Friday and was down minus 0.46% for the week. The S&P 500 decreased minus 0.06% on Friday and was down minus 0.77% for the week. The Nasdaq increased 0.76% on Friday but was down minus 0.79% for the week. Looking at the week, we can see that there were 8 up finishes versus 7 down finishes for the major indexes. On Monday and Wednesday, the 3 indexes were up. On Thursday, they all finished down. On Tuesday and Friday, the Dow Jones Industrial Average and the S&P 500 were down, while the Nasdaq finished up. The previous week, the Dow Jones Industrial Average had finished every day of the week up, but this week, the Dow Jones Industrial Average finished down 3 out of the 5 days. The previous week, it was the Nasdaq that had finished down 3 days, and this week, it only had 1 down day. So, is this the end of the rotation into industrial stocks? Is this the beginning of a tech stock comeback? I don't know, but analysts are sure to weigh in. The new unemployment claims were 770,000 versus 700,000 expected. Continuing unemployment claims were 4.1 million. The Federal Reserve's FOMC met and announced that there would be no change in interest rates. Mortgage rates, however, moved sharply higher. The Fed announced that they will not extend a rule that had allowed banks to relax capital levels. And the U.S. Treasury yield topped 1.7%, the highest in 14 months. New unemployment claims, continuing unemployment claims, FOMC meetings and announcements, mortgage rates, Federal Reserve capital banking rules, and the U.S. 10-year Treasury yield topping 1.7% are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be still want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the president, and the Congress. These 5 entities will do what they must to drive the market higher. Notice how the market rose once it was reported that the FOMC had announced that the Fed will keep interest rates low. Now we are at our question of the week. What is the FOMC? The FOMC, or the Federal Open Market Committee, is the part of the Federal Reserve System that sets monetary policy. The FOMC meets periodically, about 8 times a year, and they announce how they are going to manage the nation's money supply. They do this managing by buying and selling bonds, especially U.S. Treasuries. How much money there is in the economy has a large impact on the stock market. The more money in the economy, the higher stock prices tend to go. In other words, easy money means higher stock prices. Do you own any stocks? If not, why not? Are you afraid that the market may fall again? After all, it fell this week, even though the Fed is maintaining easy money policies. What will it do next week? I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschoolofinancialfreedom.com. Here is my trading watch list from this week ending March 20, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Grayscale Bitcoin Trust, ticker symbol GBTC. It's in the second column. It increased 5.92% for the week, and it was up 4.22% on Friday. Grayscale has topped my list several times in the past few months. Grayscale is an investment vehicle, or ETF, that enables investors to gain access and exposure to the price movement of Bitcoin without actually buying, storing, or safekeeping Bitcoin directly. Looking at a summary of results, you can see that Grayscale has increased more than 65% year to date. I own Grayscale. I do not generate cash flow from it because Grayscale does not have option contracts. I use options to generate cash flow from stocks. I use Grayscale as an indirect investment in Bitcoin. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comment section. Are you willing to share your strategy? The Southside portfolio is outperforming the S&P 500 index ETF SPY. The Southside portfolio is up 19.07% versus 4.17% for SPY, a difference of 14.9%. The Southside is beating SPY by 14.9%. This week, equities, including puts, calls, and ETFs, make up 72.86% of the portfolio. Cash is 27.14%. The cash flow generated for this week was 1.54% of the portfolio account value. The account value changed by 2.53%. Meanwhile, the S&P 500 ETF SPY changed by minus 1.16%. I sold option contracts on 5 positions this week, 1 call and 4 puts. That range from $233.37 to $943.38. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschoolofinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the southsideschoolofinancialfreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.